Good morning, everyone. Welcome to this update for global stocks and commodities for the 30th of September. It's going to be a briefer edition. There's not a great deal more to say than what I've said in recent weeks. And for all the footy fans out there, it's been a big weekend of grand finals as well. So this one won't run too long. What I'm seeing in America at the moment is we're probably going to get a little bit of a pause, a little bit of a consolidation phase at the worst, and then more gains into the end of the year. That's the overwhelming outlook for the US market. Australia at the index level, it's quite a bit different. It's hard to be at all confident about the indices because the banks are struggling and commodity prices. I think over the medium to longer term, we're in the good part of the cycle for commodity prices. But what the market does with it in the short term, it's always hard to know. So there may be a bit of a pause, but I do expect that the run to the year end looks pretty solid. There'll be the normal stock and commodity update. And last week in Portfolio Analyst, there were several growth, but also strong value buys in Australia, and it's not easy to find that combination. Stocks that are growth stocks that are getting 15, 20, 25% a year sort of earnings growth, yet they're not priced off the map because normally the market seizes on those sort of stocks pretty quickly and really ramps the price up. And we've seen with certainly some of the software as a service stocks like Altium, etc., trading on extremely high PE ratios. WiseTech Global's another one that's trading on a PE ratio of around about 100. So, not easy to find those, but I think I've uncovered a couple of gems, and they were presented in Portfolio Analyst last week. Now, the American index, the S&P was down 16 points on the week. But what I'm still seeing, though, is very strong underlying market strength and breadth as well. The Russell took a little bit of a breather, but the breadth in the market is still really good, and we're not really seeing funds coming out of the market. We're just seeing some rotation from sector to sector, and the sectors that had done really well leading up to the start of September tended to lag a bit during September, and vice versa, the ones that have been lagging had a better month. So really just some internal rotation of funds. Now the index is overbought in the short term, so we might see a little bit of a pullback or a pause, but I don't expect much. And it's just the normal sort of process that you see when the market has been strong. You see some consolidation, a bit of profit taking. Now the US dollar, gained for the second week. So let's take a look at some of the US indices. So you can see we'll start with the S&P, and we finished last week or the week before pretty positively. We'd had a strong run up, and so we're getting a little bit of a consolidation. But you'll notice that it's just a succession of higher highs and higher lows, and there's a very, very clear uptrend channel. Let me just put a parallel line on that. No, it's not going to let me. All right, we'll just do it this way. So you can see that we've got a very clear uptrend channel still in place. Higher highs, higher lows. So there's really nothing much is changing at the index level, and you'll notice that there's no real big candles like we saw over here. There's not an emphatic move in either direction. It's just nice, quiet trading. So that's the S&P. Let's look at the currency. So you can see we had a couple of strong days to finish the week on the US dollar, and we're still holding around about this important support and resistance level around 95. If we look at the Australian dollar, so it's just really moving in tandem with the US dollar, but again you can see here the Australian dollar lower highs and lower lows, which is obviously the definition of a downtrend. So every reason to suspect that we will see the Australian dollar continue to stair-step its way down towards the 70 cents mark. Just while I'm here, let's look at the Australian index. So we managed to pop up a little bit on Friday, but there's really not a lot happening at the index level, and a lot of the reason for that is because the banks are under pressure, and the reason for that is the long-term tailwinds that have assisted the banks for the last 10 or 20 years have now all virtually disappeared. So I think that's the first point. Secondly, the fallout from the Royal Commission for the whole financial services sector is such now that I think people are really questioning the merits of these investments as forming a huge part of a portfolio. And then, of course, the third thing is if Labor gets into government, which appears to be now extremely probable, then the assault on bank dividends or the franking credits is not going to help the appeal of banks either. So there's just really nothing going in favour of the banks at the moment. And I'm not saying this will happen, but I could envisage a 10 or 20% capital loss from here, which then just completely drowns out any dividends that you might make. So it's not a sector that interests me at all. Now, the Aussie stocks, as I said, our dollar dropped to 72.35, and our index was slightly higher for the week. Now, these momentum stocks, the high growth but high PE stocks, which some of them had some significant pullbacks from grossly overbought, have steadied and have started setting new short-term highs. So they're not giving up without a fight yet. So despite some very questionable valuations, there's certainly some bubble still in those momentum stocks yet. But if you look hard enough, you can find high growth stocks trading on low PEs of 10 or less. They're hard to find, but if you do enough homework, they are out there. Is this a long-term reaccumulation, or is it the start of a new uptrend in these stocks? It's too early to say at this stage. I think we probably need a few more weeks to be able to make that determination. But so we'll have to wait and see. Gold was down by by $7, and it's still just sitting around the 1200 mark or just below. And precious metal stocks, the global majors are still struggling. GDX really is finding it difficult to get off the floor. But the Australian gold market is going along quite nicely. The producers are steadily trending higher, and there's certainly a bit of interest and momentum starting to come back into the more speculative end of the Australian market as well. Okay, let's look at there's the gold chart on a weekly basis, which shows it pretty clearly. I don't think we need to go to the daily chart because we really haven't moved for about 5 weeks. And GDX also just hanging on, just fluctuating above and below this key support level. But there's really no signs yet that we're going to see an upward move in the gold price. Turning to other commodities, copper was steady at 281, and the supply and demand situation is still very favourable. The downside that we've seen in copper was very much playing out in the futures market because of fears about where the trade wars would take the global economic expansion. I think that's now starting to wane. The futures market has stopped being so fearful about the downside, and we're starting to see copper move back towards a price that more accurately reflects the supply and demand balance. And as I mentioned earlier, I think there's, on a 1 to 2 year view, this is probably getting closer to a good time for commodities. But look, they're still volatile. There's still a high level of risk there, so it probably shouldn't form the majority of your portfolio. Crude oil gained to 73.25. It's looking really solid, and you'd have to think that it's probable now that we can see a break above the recent peak, and we'll look at that chart in just a minute. So there's the copper chart. Not a lot having taken place over the last 2 or 3 months since the big fall from pardon me, from around $3.30. There's crude oil on a 3-monthly basis, so it's been a strong move from 65 up to 73. But if we pan back, and this is a 4-year view, so this is taking in the big plunge that occurred in 2015. We bottomed out around $30 in 2016, and then we've had a significant recovery where the price has gone up by 150% since then. And what I'm seeing at the moment is it's probable that we're probably going to break above this high here, and over time, I wouldn't be at all surprised to see crude oil head back towards the 85 or 90 area, and eventually you would have to think that the oil stocks have got to follow. So let's just take a look at XLE, which is the US index for for the overall energy sector. So this includes producers, it includes upstream and downstream, and it also includes the oil services companies as well. So this is a weekly chart. This reflects the big fall off in the crude oil price. So the index fell from just over 100, and it got down to 50. So it lost almost precisely half its value. We then had a strong move back up to 78, and then some consolidation. But we can note several things in the energy sector. First of all, so we can put in our support and resistance levels to this range. But what you'll notice is that we are getting higher lows. So quite clearly higher lows through this process. We had quite a sharp move here, so some strong selling, and you can see that there was some elevation in volume along with that selling. So quite clearly this market wasn't ready to go up in February of this year. But what we then look for is what happens on subsequent rises to resistance, and you'll notice that this time the pullback was much shallower than it was here. The candle ranges were much smaller, and there wasn't a pickup in volume. And so this is looking very much to me like it's poised to break out. Now you can then break this down, the overall energy sector, down into the 3 major areas: upstream and downstream production and exploration, and oil services, and then of course drill down within each of those to find the strongest stocks. So there's certainly opportunities in the energy sector, and that is something that I'll be covering in Portfolio Analyst as well. Okay, so just to wrap it all up, I think we're set up for a pretty solid finish into the year end. The US indices are short-term overbought, but I'm really talking on a daily or perhaps the next 2 to 3 weeks view. But I would expect that pullbacks are going to be quite mild. That's what all the indications are at the moment. Now, Portfolio Analyst this week, I'm really going to be examining the question: is now the time for local resource stocks? And I think that's a very interesting question to pursue. There's my contact details for anyone that's not a member of any of my services. If you haven't tried Portfolio Analyst, there's a $1 trial available. And as I mentioned last week, we now take credit card as well as PayPal for that service. So we had a lot of people join from last week, which is very pleasing. And I know from the feedback that I got from them that they're getting a great deal out of it, not just recommendations and perspective on the market, but also some really solid education as well. So that's it for this week. Cheers.